Welcome back. You're tuned in to Trading Hour on CNBC TV18. PNB Housing Finance is the company which is on our radar. The stock is down 3.5% as the company has reported a decline in its loan book for the 8th consecutive quarter in a row, and the assets under management too have slipped for the 2nd quarter in a row. We're joined by Hardayal Prasad, the MD and the CEO of the company. Mr. Prasad, morning. We know that the company has been running down its corporate book and it wants to focus on the retail side. But, can you give us a sense how long this will last? Because your loan book, as we said, has been declining for 8 quarters in a row. And the numbers, the decline on a year-on-year basis is also very high in double digits. So can you give us a sense about the loan book, from here on? How does it pan out and when does it come to an end?
Okay, let me first wish you a very happy Diwali, not only to you, to your team, as well as all the viewers. That's very, very important for all of us. Coming back to the numbers in terms of, it has been 8 quarters that we have had a negative growth in terms of our AUM as well as of the loan asset. That's a very conscious decision that the company took in 2019, that it is not going to actually do any of the corporate book. Now, the corporate book since 2019 has been degrowing, and a conscious decision of degrowth. Whether it is organic or inorganic, we have worked very hard in terms of it. Once your company decides that they need to get out of a book, it is going to take time, because corporate is one which is a long gestation loans that you have given it. There has been a 44% decline in the book from 18,000 crores almost 18. We are down to almost about 10,000 crores. I think that's one of the primary reasons that actually has resulted into this kind of a negative growth. If you really look at the disbursements and you look on the retail side, we have had almost a flat growth. The first time it's been almost a flat growth. 96% of the disbursements going only to the retail and a flat book. We have reached an inflection point. So we are going to talk to you when we go forward on 2 things. One is a consciously depleting corporate book that is there, and then you have a book which is the retail book. And when you go forward and when we discuss it again in the next quarter, you will start seeing growth. The company is under transformation. The company is under rebuilding process. And we are there in terms of the way we are going to look at it. And going forward, we will start showing some growth on the retail side.
So you're saying retail will grow in the coming quarter, but if you could just, give us a sense how, because that capital raise of 4,000 crore that you'd earlier planned is off the table. So will that pose a challenge for you to grow your book?
I think if you really look at it, the degrowth that we have seen on the corporate growth allows you massive amount of capital, which you can use it for the retail. That's one primary reason for every the risk weights that are there for 100% of the corporate book. It's almost about 30% of the. So my ability to grow becomes three times more. And that's one reason why you are seeing that there is an improvement in our capital adequacy at almost 20+%. You look at the tier 1 capital, which has crossed 17%. And even if you look at any other number, which is showing very good on the leverage side, we are at 5.89%. Now, these are the numbers which will allow the company to grow. In terms of the capital, every company requires capital. We came out with a solid 4,000 crore announcement on the capital. That's primarily because the stakeholders of the company remain extremely committed towards the company. What happened is something that I would not like to delve, because all that is in the public domain. We have pulled back that deal. However, the capital adequacy, the tier 1 capital, the leverage allows us to continue to grow on the retail side, and we will continue. We demonstrated it this quarter with a 68% improvement in our disbursement. What we will do is that we are going to very quickly go ahead and have a discussion with our board in terms of the various modes that are available to the company. Short term, medium term, long term, the company is very clear in terms of the way it is going to actually raise capital. And we definitely will raise capital, not only for the growth story that is to be written, but also for the provisions to clean up if it is required. And thirdly, in case we need to invest either in IT, new verticals, or anywhere else, I think it is essential that we also have capital.
Mr. Prasad, so I got your point. A little short on time, so I'm just trying to squeeze in, any specifics right now that you can share with us What is your current breakup between, the corporate side of the book? I think you said it's come down from 18,000 crores to 10,000 crores. So as
That's right.
As a percentage, how much is it, and what is the proportion that you would like? Where will the rundown stop, and what sort of a book mix would you like between retail and whatever residual corporate is there?
So we are now at 10,000 crores as against almost about 50,000 crore book of retail. We definitely will continue with the rundown for another 6 months, that is up to March. And at that stage, we anticipate that another 1,200 crore rundown took place in this quarter, the 6 months. We'll continue to see some more rundowns, and then we are going to come back and then take a call in March, after March, whether we would like to further remain invested in corporate book, and we are going to do new loans. I think that's very, very important from our perspective.
Okay. And can you confirm to us that, I think on Tuesday, the board did announce fundraising of about 2,000 crores, but I think that's more on the, the bond side. Are you also looking at more equity infusion post the Carlyle deal?
We will definitely bring in equity. It's just a matter of time. We have to sit with the board once again. We are looking at all options, whatever modes, whether QIP, preferential, whether it is rights issue, and we are going to take it to the board. Presently, the position of the credit of the CRAR is comfortable at 20%. So the company will go ahead and look at the short term, medium term, and long term in raising capital. That remains definitely on the agenda and is on the table.
Thank you, sir, for joining. Thank you for joining in, and season's greetings to you. We'll slip into a very short break on that note. We'll come back with more on the markets.